Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and we have a full lineup for you today. We have Luke Falasca, who's going to give us a broker update. Andrew Cox back with us, who's going to give us a DHL supply chain pricing power index update. But first, we're going to go to Zach Strickland with carrier update, brought to you by PowerFleet. Stay tuned.
Hello everyone and welcome to your Friday carrier update presented by PowerFleet. I'm Zach Strickland and today we're going to watch those tender rejection rates continue to climb slowly but surely out of the trough that occurred here in the early part of May. Again, volumes bottomed out in the middle of April, but they started recovering shortly thereafter, after the Easter week, and now we are starting to see those tender rejection rates do the same thing, but they bottomed out late April, early May. We've got our outbound tender rejection index here in blue hitting about 4.84%, still historically low. Reefer rejection rates 8.71%, again, historically low for reefer, but not necessarily, it's moving pretty rapidly higher right now, which we would expect this time of year. June, July, warmer time of year, we do tend to see reefer rejection rates go up a lot higher. But I've got the chart pulled out for a whole year here, and you can see historically, especially over the last year or so, 2019, of course, a very soft year in the freight market. And we're not quite there yet. We're still well below. If you can follow this little dotted line right here, we're still mostly below where we were for the majority of the second half of 2019. Not so much here around August and the end of July, but again, tender rejection rates still pretty modest for this time of year and historically speaking. So don't expect a huge amount of spot market activity. Carriers are still accepting a large amount of freight. So where are they starting to see increases in rejections with most significance? I've got our weighted rejection index pulled up here. It's going to value those high market share, a lot of volume markets, a lot more so than, say, the smaller markets. Atlanta, for instance, getting the top of the charts today with an 8.1 value on the weighted rejection index due to the fact that it is the single largest market in the United States for outbound volumes. Denver coming in second, then Ontario, of course, coming in third right now because it has been one of the most active sections or active markets in the country here over the last little bit. So breaking it down, Atlanta, Georgia, leading the way. What is driving that rejection rate up so much higher? Well, we've got van rejection rates there in the blue line, 5.04%, very strong jump there over the last couple of days. Again, we just had Memorial Day week, which again may or may not necessarily mean supply side, but reefer rejection rates also jumping way up, 7.13% after being down around down around 4.5%, just a few days ago. So a big, strong jump out of Atlanta in terms of reefer rejection rates. And again, it's through most all of the length of hauls here. So long haul having a little bit of a slowdown here just over the last day or so, but tweener, mid-haul, short-haul, all showing increases in rejection rates. So it's pervasive throughout the Atlanta market where you can expect rejection rates to increase. Definitely capacity side tightness going on there in the Atlanta market. Again, one to watch if you are operating out of that, especially if you need a load out of the Atlanta market, maybe check the spot market and keep those rates a little bit higher than you might normally would. So Los Angeles, so what would drive some of these reefer rates higher? Well, it's produce season out on the West Coast. This is the agricultural rate reported by the USDA, the spot market rate, all in, including fuel and other accessorials. We can see down there at the edge there that rates are starting to surge much higher over the last 2 to 3 weeks. We bottomed out again somewhere around middle of April, and now we're starting to see these rates come back up. So again, a lot of that capacity is going to flood out to the West Coast right now to cover these high-paying produce loads, which again could be contributing to that Atlanta, Georgia reefer rejection rate spiking. The Ontario market, Los Angeles, move pretty much in sync with each other. Starting to slow down a little bit, however, so maybe not so fast on heading out west just yet to cover that freight. It looks like we might be seeing a little bit of loosening go on out in the Ontario market, or at least a slowing of tightening, if you will. Tender rejection rates shooting up here over the last month or so, and then here over the last 2 days starting to settle down. So maybe the West Coast is starting to slow down a little bit, East Coast heating up a little bit more. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hey, good morning, everybody. I'm Luke Falasca bringing you another broker update. And happy Friday. We're going into the weekend. And so far, volume levels are continuing to pick back up since the Memorial Day dip. They do appear to be recovering very quickly. If you see here on the chart in blue, these are year-to-date volume levels. And you can see here we're sitting a little above the 9,500 mark. We're already up since we hit that Memorial Day dip. We dipped down to around the 9,000 mark, or actually even a tick below. So we're recovering very quickly, very good sign that things are headed back up here, especially as we finish off the month. Hopefully that does continue. Time will tell as we get into the summer months and there's more and more produce freight and projects going on. So, so far, more and more volume is coming. Now, the green line here is tender rejections. Those are continuing to climb as well. You can see they've actually hit that 4.84%, very close to that 5% mark, which is very healthy, and that's continuing to rise. We're actually almost, tender rejections are almost where they were before the coronavirus hit. So as that continues to climb up, you'll start to see capacity tighten a little bit, as well as spot market rates rise. So do keep a very close eye on that. So far, we are continuing to go up. Let's go ahead and look at the map here where those tender rejections are changing the most. So in red is where tender rejections are going down. That's going to reduce spot market rates and loosen capacity. In blue is where tender rejections are increasing the most, and that is going to tighten capacity as well as increase spot market rates. And then the areas in white are relatively unchanged. So you can see here we were looking at California before, and that was very blue, as was the Northeast. Today it's mostly white. Not a lot of change going on, so maybe it's going to soften up a little bit or just taking a little breather. The Pacific Northwest here seems to have a lot of red. That's gonna push spot market rates down. So if you're moving any freight out of here, out of the Pacific Northwest, or even down along the border in Arizona and Texas, lower your spot market rates today. Rates are going down as capacity continues to loosen. Pretty much here in the mountain northern region and Midwest region here of the United States, the Dakotas, Nebraska, Colorado, those areas are very blue. That's tightening a lot. Spot market rates will rise out of those areas. Now before, if you remember the other day, we were looking at the Northeast, particularly the Massachusetts and Connecticut area, where tender rejections saw the biggest surge of anywhere else in the country. Today is the opposite. Today they are seeing the largest decrease of anywhere else in the country. So if you're moving freight out of there, particularly Massachusetts, that Springfield and Boston area, you're going to really need to lower your spot market rates. Let's go ahead and take a look at the Boston market here. So in blue are tender rejections, which for the most part for all of May, we're sitting around that 1.5% mark. But on the 18th, they began to surge all the way up and we hit a high of a little over 12.5%. Since then, literally over the last 2 days, they have gone from sitting at nearly 12% to today we are down at 1.6%. Meaning, if you are moving freight out of Boston today and you moved freight a few days ago, you need to lower your spot market rates substantially, push rates down on carriers to create those margins, as well as be a little more aggressive when bidding freight to your shippers. The market has softened, capacity is going down, and the reason for that is right here in this green line is the volume level. We saw the volume level spike and then drop off. So that really did loosen capacity. And as far as where pricing power is there in the Northeast, we've got the Boston gauge here on the left, sitting at a 36, a pretty strong favor to the shipper right now. It wasn't that case a few days ago, so it's definitely loosened a lot. And then Allentown, Pennsylvania, as a destination market, has a score of 41. So Allentown is going to have a little bit more pricing power. It's still a slight favor to the shipper, but not quite as significant as Boston does. And this lane in particular, today's rate's going for $2 a mile, and it looks like there's going to be some softening in the near future. And that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to your DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what do you have for us?
Anthony, the carriers did strengthen their position a little bit this week. We moved it up 5 points from 20 to 25. This is 3 weeks in a row now that we've kind of pushed up off the bottom. We were at 10. That was at a series low just 4 weeks ago. So we've moved up all the way to 25. And it doesn't mean that carriers have this, the carriers are really gaining a lot of power, but it is getting back to more of a balanced market here moving forward. And most of that is coming because volumes are moving so much right now. Because the outbound tender volume index is a 7-day moving average, it's kind of, it throws weekly comparisons a little bit out the door because of the Memorial Day holiday. But what we can look at is the depth, the net decline in volumes and how quickly things rise up. And it actually, this year, has dropped a little bit less, slightly less than each of the previous 2 years, and it's recovered just as quick, if not faster. So I think that's a good sign that these volumes are going to come back over 10,000 in a couple days. I think we're going to push back up, and we're going to continue this steady climb to the upside on the volumes.
Excellent. And when we're looking at these volumes, one of the things that, well, first off, this is right in line with your expectations when we're seeing that increase in the supply chain index. Second thing is, now that we're seeing volumes increase, one of the other things we were watching was for capacity. Last couple of weeks we saw volumes increase, but not so much capacity tightening up. What's that looking like? Yeah,
we're finally seeing some upward pressure. I mean, it's just, again, just kind of a steady climb upwards. We're now sitting just below 5% on the overall outbound tender rejection index, and then just under 9 on the reefer tender rejection. So things, and that was actually last week the reefer rejections kind of hit a sputter and kind of slowed down, but we saw that uptick again this week. The produce season out of California and Florida is still right in season, so we're seeing some tightness there in the reefer markets, not as much in the overall or in the van, and again, especially as flatbed. I didn't put it on the chart here, but it remains really low, below 2%. That industrial market still is churning, trying to get going, so that would help if we could get some more volumes out of that front, but the capacity still remains pretty loose, even though much better than it was a couple weeks ago.
Exactly. And Andrew, if you will, talk us through some of the things impacting each one of these equipment types. So things that you mentioned, reefer, produce season is
right.
Or timely right now.
Yep.
Outbound tender rejections, we're looking at van, a lot of consumer goods potentially.
Yeah, consumer spending is actually doing pretty well, in my opinion, for as many jobs have been lost and as much of an economic hurt as the COVID had put on for the last 3 months. Consumer spending is actually pretty good. I don't have the Bank of America data here, but we have it in the report if you want to go and look on FreightWaves.com. You can see this week up to the 23rd. I mean, consumer spending overall is down roughly about 10 or 15%. So I think that's pretty strong. I do think it is being propped up by the government spending, so I don't know how long it can last. I think we're really going to have to see where the fan is and what it hits at the end of July. We're going to see when that money kind of runs out and where we're going to be. My hope is at that point that the people that can continue spending and keep it going, but we're going to have to wait and see.
Exactly. And real quick, last equipment type, flatbed. As you mentioned, definitely difficult times, especially when it comes from industrial side segments. Construction, maybe a little bit more alleviation there.
It is, yeah. I mean, construction would be good. We saw great new home sales last month. We're seeing housing starts. We get that number soon. But also, the automotive industry has gotten back going. If we looked at the outbound tender volume index just as Michigan as a whole, as that I've brought up a couple times in the past, that has now pumped up in the last few days. So I think that the automotive industry is getting going, but it's just a slow starting. The automotive and also the aerospace is another big part that I think is just slow moving right now, but it'll get there.
Excellent. Andrew, thank you so much. We appreciate your time. And thank you so much for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for the latest. Thank you so much for tuning in for this Friday edition of FreightWaves Now. Don't forget, you can always check out our content on all your favorite streaming platforms. Just check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.